Have you ever found yourself completely lost reading a company's financial statements? I know I often do. The world of financial accounting is a vast and complicated area of specialization that may seem confusing to the casual observer, let alone a professional. It requires careful observation and a willingness to pay close attention to detail. And although this concentration may seem overly formalized and a bit dull, I can assure you it's a very important profession. As an accounting major, I can help you gain a basic understanding of these documents. I can assure you that with my explanation of the three major financial statements that are used to show a company's financial position, you'll have a much better understanding of what these statements are and how to read these statements produced in financial accounting and gain a better understanding of today's business world. I will discuss the income statement, the balance sheet, and the statement of cash flows. The first financial statement I will be discussing is the income statement. This financial statement gives the reader an idea of how the company operates and how efficiently it does so. The statement begins by showing the company's total revenue subtracted by the cost of goods sold to get the company's gross income. The next lines show the company's operating expenses, which include things like wages paid, utilities, rent, and other expenses that result from the company being in business. These operating expenses, plus the taxes that are mandatory for the company to pay at the end of every quarter or year, are subtracted from the gross income to get the company's net income for the year, or their bottom line. Basically, on the income statement, you want to see low operating expenses and a high net income. That'll tell you the company operates very efficiently and they're selling a product that people want to buy in today's marketplace, which was cited in Clausen's article on fixed income and goods 2010 on financialreportingandaccounting.com. The second major financial statement is the balance sheet. This statement is used to show a company's assets in comparison with its liabilities, or what the company owns versus what they paid to own those things. The asset side includes things like cash on hand, stocks and bonds, equipment and land that the company may own. The liability side and equity side includes things like loans that the companies took out to pay for that equipment or land, accounts payable for their day-to-day transactions, and stock issued by the company to fund its business needs. The reason the statement is called the balance sheet is because the dollar amount on the asset side must match up with the dollar amount on the liabilities and equity side to show the company has enough assets to cover their liabilities, or they have enough money to cover what they owe to people through various equipment or cash. And this was recorded in Spiceland's intermediate accounting textbook in 2009. The final major financial statement is a statement of cash flow. This is by far the most informative but yet complicated financial statement of the three. This statement shows how cash flows through a company and what areas the company is spending their money in. It's broken down into three categories: the operating, investing, and financing sections. Basically, the statement tells you how the company operates, what kind of assets it's buying, and how it's investing its money for long-term projects. The statement was created relatively recently compared to other two, and is becoming the most popular of the three because in today's unfortunate environment where scandal and fraud is somewhat prevalent in our profession, this helps you explain where the money's going and what it's being spent on, and making sure that the money is just not disappearing into thin air. The income statement, balance sheet, and the statement of cash flow are all essential to today's business world and are important to understanding a company's financial health. You'll have a much better understanding of what these statements are and how to read these statements produced in financial accounting now with my brief explanation. Now, if in the future, if your boss or coworker asks you to explain what is going on financially at your company, you'll have no problem doing so.